Hello everyone, K Kim here. Welcome to the market update. Today is March 31st, 2017, Friday. Market is still open as I publish and record this video. We have another hour to go, but by the time I tweet this out to you guys, market probably be closed. I hope you guys had a great week. Trading thus far looks bullish here. We've been talking a lot about, I don't know if you guys read my last article on the next big support. Obviously, the few levels that I was watching, obviously the 50 MA and the 50% retracement zone, looking at the S&P 500 ETF spider here. So when the technicals, when they collide, when they overlap with each other, when they coincide like this, you pay attention. So obviously, I measured this here to there, right? This is what you call Fibonacci retracement tool, and it pulled back. This was a first level of Fibonacci right here, which is a 38.2%. This is a 50%. Again, this was all illustrated on my article, The Next Big Support, that was written March 21st or so. 21st, yes, after this huge decline. And so these two levels are first levels of support we talked about, and that the first level was actually coinciding with the 50 EMA. You can see that right here, that dotted pink, where it was coinciding with the first retracement zone, which is a 38.2% retracement, which we held there for 3 days, which looked a lot like bear flagging pattern, which we talked about in the last video. And we got that gap down towards to where? The 50% retracement zone, which is a second level of support of this Fibonacci retracement tool, which is coinciding with this rising uptrend support from the December lows and the rising horizontal pivot from December and late January. So you can see we got 50% retracement zone there, rising uptrend support, and the rising pivot all colliding in that vicinity at 231.54, and that's the level where we saw that gap was open. Now it has been closed as a gap was filled on that gap down. So you can see we had 4 technical data was colliding in that vicinity of 231.57. Don't you love technicals? How else are you going to able to predict strong level of support without technical analysis? Right? Anybody who bashes technical analysis, they have no idea how to trade this market effectively. Without technical analysis, you have no target. Without technical analysis, you have no levels. Without technical analysis, you have no entry, calculated entry. Without technical analysis, you're just hoping and praying. Without technical analysis, you're still looking for the crash since 2016 February lows. You cannot trade this market effectively without sound technical analysis. And I say sound because there are supposedly gurus and experts who has no idea what technical analysis and teaching you false information. And I'm not saying that I know everything. I'm not saying that I'm your master. What I'm saying is these are important technical levels to watch, even if it didn't play out. Right? Even if this thing were to lose this level, continue lower, this was a level to watch at least. Just like it was a level to watch at 233. Right? Actually, if I actually go to the line chart, we never lost 50 MA. We never lost 50 MA. Do you see this here? Let me remove everything here, all my tools. This is 50 right there, right? So once you lose 20 MA, what's the next level to look at on your technical moving average? It's the 50. If I actually go to the line chart, as you see on your screen right now, we never lost 50 MA because line chart is based on closing price, right? If I actually go to back to candles, we gapped down below it, but we closed above 50 MA, that dotted pink moving average. That means 50 MA, technically, it held as support. Do you know what I'm saying? And the next day, what happened? Next day, we gapped down slightly. Right there. 50 MA held again. So 50 MA was actually a crucial moving average. It held on this day in 22nd, and then 24th, and the 27 as it closed above it, and then back above 28. How are you going to know your levels without technical analysis, right? And then what was the next level of resistance to watch is this level, right? This was a prior resistance level. We blew right through it. And then what was the next level of resistance is the 20 MA, right? Because 20 MA has been acting as strong support in the past, recent past, I might add. I'm talking a couple months here. You can see this late December and all throughout January and early February, that 20 MA was a monster, right? This is a huge bull supporter right there. And then we did see some bounce here on March 9th and 14th. We lost that with that Marubozu candle. So it was the important level to watch. So we held for about a few days. We hung around for below 20 MA, as you can see right there. And then we pushed right through. What was the next level of resistance? Aha! Prior support becoming a new resistance. How are you gonna know your levels without technicals? You can't. You gotta love technicals, right? So now, where are we finding support? Well, now you see you got 20 MA here, and we got the prior support level here, which is becoming a resistance. So we're sandwiched between 20 MA and the prior resistance level, or prior support level becoming a new resistance, right? So when you do your analysis, looking at technical analysis, what do you say now? Well, if this thing does get below the 20 MA, what's the next level support? What's the back support right here? This is about 234, 36-ish. So let's say we lose that, then possibly all resistance becoming new support in that vicinity, right? Maybe when this thing does come down, we'll meet with 50 MA once again and possibly get back up. So we got the levels to watch going into next week. It's 236 and it's 234. It's the 20 MA and the 50 MA. Isn't that awesome? Right? So if we do get above it, what's the next level of support? We do have, or resistance, we do have a gap here. Right? So we got the gap fill here. So a lot of times these gap areas can act as resistance. So either the gap opening or the gap fill, which is coinciding with the falling resistance. So this vicinity is going to act as pretty, at least short-term pullback resistance if we do continue higher. And then if we do pull back, what's the next level to watch? It's this level, which is a prior support, resistance, and that 20 MA probably will follow to the upside if it does go up. So you know your levels, so you can understand where the if stock goes higher, what are the levels to watch, what are the potential level of support, what are the potential level of resistance. And I just gave you a minor term sentiment analysis. But if we look at really, kind of pull out a little bit and look at this more of an intermediate term sentiment, intermediate to primary, we're in a bull market. We're in a bull market. And bears want to ask, why does this happen all the time? Well, because we're in a bull market. We're in the higher lows and higher highs. What did I say last week? Just because we saw this kind of move, I'm not going to be scared out of my long positions. You can go back and check what I said last week. Did I say, well, I'm scared? We're going to go, I don't know, there might be more selling. I'm going to start closing my long positions. I don't know, market might be crashing. I don't know, there's a good chance that we may come down and get 220. Maybe feel this scared. Maybe this Trump rally is going to go to nothing and we may get all the way down to 210. That's not what I said, right? I'm sure there were some who said something like that. What I said was, not to tell you that I told you so I called it. No, none of that. It's important to understand not only minor term analysis, minor term sentiment, but also understand the big picture, intermediate term perspective. I said because we're in an intermediate term uptrend, I do believe that some of these levels are going to act as strong support. This recent move, this was when I did my video, I think. Let me check, actually. It was 24th. So when I did my video we were right here, right on this day. Right? What I said was, I'm not going to get scared out of my long position. I'm holding all of my long positions and also the new position that I have accumulated on this gap down at 231. This was a strong level of support that I was watching, and when this gap down, I started accumulating a little bit more long positions, buying the dip there on the indices. So Spider looks to be finding some good support there. We did see some follow through to the upside 4 to 5 days. Looks like we're seeing short-term resistance. This is not going to roll over. We may see short-term pullback, but I've just given you some of the levels to watch. Let's continue. Russell 2000 looking great here. Actually, Russell 2000 actually gotten above this resistance, retesting this horizontal resistance. That's a good sign. Why? Because we're no longer potentially creating lower highs, but possibly if we get back up to 138.54, that might be equal highs and possibly pull back, and then we may do inverted head and shoulder formation here. Obviously, we held 100 SMA. This is a level that I've been talking about here. You can see if we go to line chart, we never lost 100 SMA. This is 100 SMA, simple moving average. So this moving average is very helpful. Once you lost 20 MA, what's the next level to watch? It's 50 MA. Once we lost 50 into those, what's the next level to watch? It's 100 SMA. And we saw strong bounce in that 100 SMA there. You can see on the line chart basis, on a closing basis, we never closed below it, though we did get that gap down. You want to talk about bear trap? That's a bear trap. You want to talk about bear trap? That's a bear trap, right? It looks like that 100 SMA is acting as support currently, and obviously we're still kind of range bound on Russell 2000. We haven't made new highs. We haven't been trending last, what's that? 4 months or so. We haven't been trending here, so we've been really in this consolidational move here, and that is actually, it favors the buyers in the long term, because that's you've heard people say that correction happens either in price or through time. That's correction happening through time. Basically, after this kind of huge jump up, how much move was that since the election or the prior to the election? I mean, that's a 20% move on the Russell 2000 just in 1 month. Of course, I mean, it's not as surprising that Russell hasn't gone anywhere, but really it hasn't gone down either, right? It hasn't gone down either. We really haven't gotten, the bulls didn't gain back all of it. We had a little bit of, we had this kind of a consolidation pattern to digest that gain, to see that kind of a, correctional move through time. And then after gaining its composure, having a good enough rest for the buyers, it is ready to get back. And that's what I think. When I look at the overall indices, Spider, Russell, and the banks, actually I'm going to skip the banks today. But when I look at Spider and the Russell and all other indices, that's what it looks like. It looks like we have seen, because everybody's looking for proper, 8% corrections. And that's kind of what I've been saying all year long. We may not get that. Spider, what do we get? The recent pullback. Was it a more than 5%? Let's check it out. It wasn't even 5%. I think I've been saying since kind of early January, I don't think we're going to see not even maybe a 5% correction this year. At worst 5%, but I don't think we're going to see the proper correction of 8% through 10%. I don't think we may not see it this year. Maybe next year, but we may not see it. I think the best we're going to see is probably 3%, 3.5%, 4%, possibly 5%. But I don't believe that we're going to see up to 8 to 10%. That's what everybody's looking for, and I think that's what everybody was looking for possibly on the Russell, and that's why it is not giving it, and which I've been saying it since this year long, and just we've been consolidating again. That favors the buyers. So that's kind of what it looks like here. So yeah, I think overall market does look bullish. Obviously looking at an intermediate term and a primary term, we are bullish. And looking at more of a minor term perspective, I would have to say I'll categorize as neutral to bullish, just because we are still in this kind of a lower low, lower high phase. You see that? So this is high, lower high, and this we don't know yet, but because we're still in this kind of a lower high, lower low phase, I would say, let me say neutral. Not bearish yet, but neutral, as we've been seeing a bit of a bullish momentum. So I wouldn't quite go bullish. I wouldn't quite put a sentiment as a minor term sentiment is bullish as of today. It might change once it starts to kind of do something like this. I think then minor term sentiment will be bullish. But I think today I'll say neutral. That's kind of what I'll say. Actually, so that's kind of my analysis on Spider and Russell 2000 there. Let me do gold and silver end the video. We've been tracking this for a while, and again, like I've been saying, I really want gold and silver to do well so I can get back long, but I don't want to go long until I see primary term sentiment changes back to bullish. When I say back, I mean back like here, you know, back in 2009. Haven't seen that. We still bound by this long-term resistance. So as long as it's below that, I still look at this as cautionary name. Silver, obviously, possibly having this inverted head and shoulder here. We need to get back up before, you know, possibly doing something like that. Then that might get my attention. Looking at GLD, a similar story. Look, again, we gotta continue to look at a big picture here. We are still bound by this falling downtrend resistance. That's a major primary term downtrend resistance. So I wouldn't be interested until this thing gets back up and over above 124. GDX, same thing. I mean, they're all silver, gold, GDX. They all just bound by this falling resistance. We're still below it, and GDX is still well below it. And we talked about this potentially forming inverted head and shoulders. This is a neckline. It's struggling here on this resistance. This thing needs to get above 25.50. You want to possibly confirm this inverted head and shoulder, and needs to get above 28.69 to get above this primary term downtrend resistance. Still a lot of difficult road ahead for these metals and miners to turn things around. It's going to take time, so I wouldn't be rushed or hasty on these names. If you're a long-term investor, at least you want to be a long-term trader on these names. So that's what I got. Have a great weekend and good luck trading next week.